So you came back from this trip to Europe. Did you go to the UK, by the way?
Yes, I was actually in London.
You were in London. Okay.
Paris.
And you came back and you said you're actually bullish on Europe. But when something like this happens and you see terrorism again in a European market, does that scare you away?
I think myself, like everybody, is starting to see a bit of change. First thing we're starting to see for the first time is core inflation picking up, not just headline inflation. And it's making people want to be able to be bulls, hedge their bets on inflation, own real assets like real estate.
Right.
But at the same time, people are afraid. People want to be conservative, whether it's risk of terrorist incidents out there, or I call him the Game of Thrones kid who's running North Korea,
right.
you know, with all the crazy stuff going on there. And I call them.
Are they afraid of Trump, by the way, too? Would you put that as
I would say they consider that more global shock risk of political risk type of thing as opposed to life safety. But I would call investors today conservables. What they're looking for is how can I invest my money and be a bull, but at the same time be safe.
Right.
And I would liken them to tourists. I would say that folks like cities to invest their money that they can sleep at night that have less exposure. I would say Madrid, I would say Milan, and I would say New York City as examples of markets where people could just sleep at night in terms of where their money is.
But Joe, if anyone were to look at cities, list of cities that could be the subject of terror attacks, for instance, I would think New York City's at the top of that list.
To me as well, but what's interesting in terms of the psyche, in terms of the average investor, and to be candid myself as well, is that so far, I don't want to jinx it for us, after 9/11, we've really stepped up in terms of security measures, et cetera, et cetera. And when you see what's happening in markets all over the world, really, at the end of the day, New York City is probably the absolute safest alternative to put your money in terms of rule of law, currency, issues in terms of terrorism, et cetera, et cetera. So all of a sudden, New York is rising up. There was a recent transaction that just happened yesterday at 245 Park. You saw H&A, Chinese company,
right.
You know, an aggressive bidding. You had 12 bidders right there to the end. Bidding.
Were many of them Chinese?
Very many of them were Chinese investors. You actually had interesting dynamic. You have Chinese, and you have the Middle Easterners that have come out of their shell now that oil's come up. But new dynamics are coming. People coming back from Brazil, people coming from India. Places that you might not ordinarily think of.
But you know, I'm surprised by the Chinese because, you know, even though we know that they were in commercial property the biggest foreign investor last year, something like $20 billion. They've now been told, though, by the government, you know, through these rules, you know, you've got to cool it. So I'm kind of surprised that they're still in the market so vigorously.
You know, I've been hearing the same message.
Yes.
You know, more so starting in the last few years, particularly when we had a little bump in the road and you saw their 4 trillion drop down to 3.2 trillion in terms of reserves a number of years ago. But with all the rhetoric, they're still out there. They're very aggressive in the marketplace, and they still look at markets like New York City as the best risk-adjusted return for the money. And I would say something else. For the money they already have out there, they're sort of rebalancing. If they have a little money in Australia, if maybe they have a little money in London, you know, let me raise some Madrid, let me raise some New York City, etc.
But you know, list of cities I didn't hear though was in Asia. What about Asian cities? Aren't they safe havens?
Very much so, but not the ones that you would traditionally think where the capital is. What I mean by that, where people are investing their money in terms of safety, is probably much more a place, a market like Tokyo. That's their outlet to Asia. To be candid, a lot of that wealth that's coming out of China and coming out of Hong Kong, it's really leaving there for a particular reason. They want to hedge their local market. It could be political risk, could be concerns about 20
So they want to get out of that region.
They want to get out of their particular countries, and then to a lesser degree out of that region.
So how come, I know you're not only about New York, although New York is a big market for you, but how come they're not going into some of these I'm talking about the Chinese in particular, but how come they're not going into some of the second-tier cities in the U.S.?
It's actually been happening. It's a trend that's been picking up over the last 2 years. But one of the things that I see in a little bit of reversal is people have been a little bit more jittery lately. You know, stock market's been up. Donald Trump put a little fear. You know, what's he going to
little
tweet?
bit.
What's he going to tweet at 8 a.m. on Sunday morning? And that concern makes people become, as again, what I call the conservables, and say, where am I going to sleep at night? So if I'm H&A, do I like the second-tier markets in the United States? Yes, I love them, but I'm sort of thinking to myself, you know what? Yeah, I love it, but I also want to sleep at night. So they have a base in the major metropolitan cities and then exposure to the secondary markets. We, to be candid, for the last 5 years have probably been net short on New York City, but now we're probably reversing back as there's a little bit more value in the market.
Okay.
Joe, it's Yvonne in Hong Kong. This is a time when we do see, though, with capital controls in China, that regulators are, they're very, in terms of scrutiny, they're scrutinizing these products, that are offering higher yields. They're placing limits on what, insurers can actually buy. So if we're not seeing maybe a possible slowdown in deal flow, what does it mean for the size of these deals? Could they be smaller?
Well, I think H&A, you're going to laugh at me, but at $2 billion for the size and scales of these Chinese companies is downsizing in terms of the relative scale of deals that they can handle. They can actually handle, if they didn't have the restrictions they had today. I heard a quote from somebody who's chairman of one of the largest organizations out there. He said, we can stroke a check for $10 billion if you had an asset in New York that had a value of $10 billion. So I think you're already seeing that starting to be reflected in the market, but just for us, it's big dollars, but for the size of their business, relatively speaking, it's not ginormous.